All right, this is my short-term view for the coming week. I want to remind you that if you want to get our rankings and trade setups every single week, we put out posts every single week for the top 81 best traded stocks, futures, and ETFs. It's everything there that you could possibly want to trade if you're active in the markets, with our amazing analysis on 3 time frames and lots of notes to you and what we think are the most favorable setups. And if you want to try that, just send an email to slim@askSlim.com and I'll send you a special half-price link. You could check it out for a month. You don't like it, just cancel it. And I think that you will really find it to be very valuable information. So write me an email on that. First-time members only for level 3 services. All right, so what I want to look at here is the stock market. Now, like I said in the beginning of the show, I was pretty reliant on what is one of the most valuable patterns, and I showed last week in the show that kicker patterns tend to be highly reliable. Interesting, I've gotten a number of emails this week that said, well, the kicker pattern's no good, or it's been violated, or there goes the market to new highs, and a lot of negativity actually. And it doesn't matter. I always believe what is the best risk rewards, and overall kicker patterns are highly valuable. They're highly reliable, and just because one doesn't work, it doesn't mean that they're no good. As a matter of fact, this one might just be a little warning as to the nature of the market going forward. But clearly this pattern has failed right now, no doubt about it, and our projection for the week was incorrect on the stock market. Now, we actually were about 60% correct for our members when we looked at the other 4 major markets, so total 5 major markets, we did pretty well. But in the stock market, we were absolutely wrong. Bond market, we didn't do that well either, because we were thinking of the inverse correlation of the stock market to bonds. And if we thought the stock market was going to stall, well, we thought the bond market had a little more room on the upside. Here's the S&P 500 chart. So what we are looking at here, of course, is our cycle patterns. I mean, that is the core of our work, and it's the way that I believe to best understand the movements within the stock market, within any market or within any stocks. Here's what we see right now, and you look at these patterns right in here. So that is the bigger patterns that we're looking at. And then there is a smaller one right there. I changed the way that looks because I have it looking the same way up here. So I wanted to, really get for you to be able to see what our projection is. Let me just come in here for you to see this a little closer so you could see what we're looking at this week. Now, I want you to look at the last pattern right in here. See the rally in here? It actually rallied way up to here. Normally, when it rallies for too long of a period of time, you get a quick move to the downside, and that is what happened. You can see that there. Actually, I thought this was the peak, and that's what messed me up a little there, but then it extended a little more and then had that big down day, which was pretty nice. Now, when you look deeper into this pattern, you can see that it was made up of 2 cycles. This is the ideal cycle right in there, and this is the actuality of how it traded. You could see that right there, because this is the sum of all of the cycles, and you could see the 2 smaller patterns right in there. So actually, you could see the smaller pattern back over here too, which is pretty clear. Now we got into this period where we got the 2 upside moves. Now, I didn't give the market credit for that. You could see that this was last week's resistance, which I left in there. I expected it to roll over in this period and then move down in here, have another rally, and then move down right there. That was my projection for last week. However, it moved to new highs and took flight, and that only changes the numbers. It doesn't change the pattern. So what are we looking for the next week? We're looking for a pullback into somewhere about midweek. The numbers for the pullback that we look at here are around 2403. That's the minor support right there. That's not much of a pullback. There's a possibility that the pullback drops a little bit lower than that, and the next support would be around 23.94, which was interestingly the resistance of the previous week. So what we look at here, 24.03, 23.94 are the two important numbers. We will look for an early week to midweek pullback that doesn't get very deep, and then another move to the upside. That's this move right in here. That's that upward advance, and that should get you up in towards this fib confluence zone right over there. Now there is a weekly fib resistance around 24.16, where it's just below right now. The daily confluence is up here at 24.24 to 24.29. We do not see it getting beyond there. And as a matter of fact, there's a significant period where we think the bonds are going to correct into this first to second week of June and then explode to the upside. That's where we think the decline is coming. We think that there's a ton of risk moving out 2 weeks and longer, but the next week doesn't have all that much risk. Again, what we're going to look for is a minor dip and then another rally, so that doesn't mean much change for the week, right? And then the risks really picking up as we move into the following week. We expect to do better in our analysis moving forward. Sometimes we get these time periods where it gets to be more difficult, but we have faith in our work and also in the experience that we gain helping us as we move forward. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.